Wednesday, December 8th, 2021, Monaco 64, home of alternative economics and contrarian views. So Russia and India have jumped off the petrodollar ship. We're going to look into that today and what it will mean for the United States, for the economy in the United States, when more and more countries abandon the dollar as a method of payment amongst themselves. Because if Russia and India still want to trade with the US, of course, they have to pay in dollars. But it's very significant, I think, that more and more countries are moving away. More and more countries, like China as well, are making bilateral agreements with other countries to use their own currencies for bilateral trade. And that's very significant. You might say, well, they've always been doing that. Well, they haven't. That's the whole reason why the petrodollar has been so strong, or relatively strong. That's why the United States has been able to run huge current account trade deficits, because it's not just for oil that countries need to pay in dollars. It's because of custom and tradition. The dollar 50, 60 years ago was rightfully so known as good as gold. And countries held dollar reserves, not just to trade with the US, but to trade amongst themselves. And that's what's kept the US able to borrow and spend so much, especially the governments, to build up a military that's bigger than, I think the statistic is that it's bigger than the other 17 strongest countries in the world. And I think countries like China, Russia, and even Brazil are kind of fed up now with that. They realize that they're basically paying for their own submission to this system. And of course, the United States, for the last 10, 15 years, maybe more, has been using the dollar as a weapon as well, not just an instrument of payment and trade. So I was on Twitter, it was yesterday, I think, yeah, or maybe the day before, and actually it was yesterday, and someone tweeted out about Moscow and New Delhi abandoning US dollar in mutual settlements. And I asked for the reference, like a link to the story, and it's actually from urdupoint.com. So as you can see here, the story is from yesterday. So let's go through it, and then we'll go into some other things like what Brazil is doing and what I think they're doing. It's speculation, of course, but it says here, Russia and India have abandoned the US dollar in mutual settlements. All payments are made in rubles and rupees. Alexander Mikheyev, the Director General of Russian State Arms Exporter, Rosoboronexport, said on Tuesday, by tradition, we name all transactions in dollars for ease of calculation. So you can see that they used to. The reason they do that is because of tradition. So maybe Ben Bernanke was correct, but they're going to be paying themselves. They're not going to need dollars, but they're going to denominate the calculations in dollars and then convert it to rubles or rupees, depending what the payment's going to be and from who to whom. In real work, Rosoboronexport has moved away almost 100% from settlements in the US currency. As for India, all settlements are carried out in rubles and rupees. In addition, we're actively practicing offset projects, which are also present in the contracts signed today. I guess offset would be basically bartering. let's say Russia sells some military planes to India worth $1 billion. India sells whatever it sells to Russia. I don't know what they sell to Russia, $1 billion worth. They just like it's a barter operation, right? That's what it is, barter. This is a normal modern practice. One of the trends in the world market, Mikheyev told reporters in New Delhi, with such an approach, the sides do not face the risk of delays in payments when fulfilling our contractual obligations to our partners, he added. So that's the story. I think it's significant. I covered a few months ago the fact that China and Indonesia have done the same thing. They've agreed to a bilateral currency agreement. As to Brazil, I spoke recently that President of Brazil, Bolsonaro, was invited to go to Russia recently, and he accepted. I think it's going to be either in February or March next year. I'm sure that will be probably on the agenda of what President Putin and President Bolsonaro are going to talk about, I would say. The other thing that I would say is when you want to deal with other countries and accept their currency, you want to make sure that that currency has some value. So what do these countries need to do? Well, they need to add gold to their reserves, because gold is the ultimate backer of fiat currency or currency, I would say. Definitely, it has been for thousands of years. And we have seen that since 2018, India has actually picked up, officially that is, the Central Bank of India has been buying a lot of gold, because I think Russia last year stopped buying gold, but India has picked up the baton, so to speak. China, of course, has a lot of gold and is probably accumulating even more. We saw Brazil, as I've said several times now, they increased their reserves by 62% just this year so far. Up until July, it will be interesting to see what they've been doing since then when we get new data. We saw Serbia repatriating all their gold, and their central bankers saying that they're going to keep buying or adding. Serbia, I think, will be a big part of the One Belt, One Road project for Europe. It's going to be like a gateway. And yeah, the Balkans over there. We've seen Singapore as well, of course, which is very unusual. They kept it under the radar. They added 20% to their reserves. So now how will it affect everyday Americans, the United States? Well, on a bigger scheme of things, I think it will lead to higher interest rates, because in the past, every country in the world, I don't know how many there are, maybe up to about 200, they needed to have dollar reserves to trade amongst each other and with the US. And a lot of times they didn't keep those reserves in cash or in the bank in the current accounts. If they had a lot of reserves in the hundreds of billions, for example, they would buy treasuries or treasury bills, depending. Well, they'll probably buy treasury bills like a 3-month or 1 month, 3 month, 1 year bills, and then 2 year notes, 5 years, depending on the management of their reserves. All that means is that there's demand for treasuries. When there's demand for treasury bonds or treasury notes, it keeps yields low, because when you buy bonds and the price goes up, yields go down. So interest rates remain generally low, despite the fact that the US runs a huge trade deficit. I know the trade deficit yesterday shrunk, but it came out as expected, and it's still really a big trade deficit, about 67 billion. So what it will mean, less demand for treasuries, And this is not going to happen tomorrow. Yields are going to spike. This is going to happen gradually. As I've said many times, the petrodollar is going away, but it's like a super tanker moving, right? Moving around it. It's not like a little Boston whaler going like that. So that's how it's going to affect it. We also, in terms of interest rates, we're going to see a lot of dollars flowing back into the United States. So the supply of dollars is going to go up significantly. What does that mean? Well, the value of the dollars in the United States are going to go down because it's almost like the Fed creating more dollars, but it's coming from abroad. Dollar that sits abroad and does nothing will come home to roost, so to speak. And that's going to make everything, well, things that don't grow as quickly as the supply of dollar coming home, they're going to become more valuable versus a dollar. That's the definition of rising prices, or if you want to call it inflation. I don't like to use the word, but actually it will be an inflation. It will be an inflation from abroad, not from the Fed. So that's how it's going to impact it. And yes, and some people might say, well, the dollar index is really high, but look at the dollar versus the yuan. So this is very significant. People are talking about king dollar. The dollar is really strong. But this chart, this is how many yuan $1 buys. Does that look strong to you? I don't think so. So anyway, with that, let's quickly look at the markets. Today, we're going to take Billy for his checkup, semi-annual. We take him twice a year. So he's going to the vets. It's 10 past 8 a.m. London time. We got spot gold, 1788.50. It's up just under $5. The high's been 1792, the low 1783. Silver is down 4 cents, 22.45. High has been 58, the low's been 40. So pretty narrow range so far. The Dow is up 70 points, 0.2%. Yes, we've seen a huge squeeze in the last few days in the stock market. That could be part of all the dollars coming back as well. Or some people say it's because this Omicron is not going to be as bad, which we all knew anyway, and there's short covering maybe. We got the NASDAQ up 50 points, 1/3%. We got the S&P up 11, 1/4%. The FTSE is up 0.2 at 73.57. For the currencies, we've got sterling unchanged, 132.50. The euro is up 0.2%, just below 113. The dollar is down slightly versus the yen, 113.40. Dollar continued to drift lower. As I said, the dollar is not strong against the currency of its major competitor, I would say the major industrial exporting nation of the world, China. The dollar is now below 6.36. We're at 6.3550. It's down 1/8%, and it seems to be a gradual move lower. We don't see big days of down 1%. It's just like chipping away. The dollar's been chipped away versus the yuan, so to speak. Aussie dollar this morning is up 0.2, 71.31. The dollar is unchanged versus the loonie or Canadian dollar, 126.44. And the Kiwi dollar is unchanged at 67.87. To the commodities, we got WTI crude down 0.75%, 71.25. High-grade copper is up 0.2 at 4.35. Carbon emissions, we've been speaking about that, and that's really important for Europe and energy prices here, and it's going the wrong way. It's going to make it more and more costly, not just for energy producers or energy companies, but for industrial companies that use fossil fuels to operate. It's almost at 87. Well, it's trading right at 87. It's up another 2%. U.S. natural gas is up 2.33% at 379. Just to finish off, let's quickly see where the 10-year yield is this morning. It's down 2 basis points at 1.46%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below. I wish you all a great day. Take care. Bye.